Alright, welcome to this new video. In this video, we're going to talk about draw on liquidity. The framework I'm going to teach you in this video, I'm using myself to frame my intraday trades around. We're going over the basics about internal range and external range liquidity. We're going over my intraday strategy and some pro tips how to best find the draw on liquidity. So without further ado, let's dive in. To find your draw on liquidity, first you need to understand the basics. Internal range and external range liquidity. Internal range liquidity are imbalances, external range liquidity are old highs and lows. So before every trading day, make sure you've marked out both old highs and lows and all the imbalances in the trading pair you are going to trade. Intraday, I will search for 1 minute and 5 minute entries from a 1 hour array. I will hunt on a 50 minute from a 4 hour array. And if I have a 1 hour entry, most of the time that's based on a daily or a weekly array. And some essential tips here is you need to follow the displacement. If you're not sure what displacement is, go watch the dedicated video on this YouTube channel. And also make sure that if you're on a trending move, the opposing arrays should fill. So if you're on a move down, all your discount arrays should fill. And if you are in a up move, you want to see premium arrays fill. With this framework in mind, let's go to the charts and look at some examples. So currently we are at the 4 hour chart on NASDAQ, and let's see how we can frame our draw on liquidity around this. So we just displaced downwards with this massive down close candle, and we left a fair value gap. So that's a fair value gap. We are in a downtrend, and in a downtrend, you can take your trades from premium arrays. So you want to see what price does in this fair value gap. Does it trade into it and displace lower, or does it trade to it and displace higher and just disrespecting this fair value gap? As you can see, we trade into it, and the bodies are closing below this fair value gap, and that would indicate that we're going lower towards this swing low right here. So based on my draw on liquidity and following the displacement, my eyes are aimed to this low. Price takes out this low. It fails to displace below it, so now potentially could see another tap into the fair value gap, and it does. But after that, trades lower, doesn't take out this low yet, so you can call it a double bottom. But this is just a liquidity pool. So now the draw on liquidity is very clear. It's going lower. And it does. And it displays below this low. And because it displays below this low and doesn't close above it, I'm anticipating that price is still going to continue lower. And it does. And after that, what do we have? We have this old low. We have this 4 hour fair value gap. And what you see right here, we're trading into it. And the wicks to the damage, the bodies tell the story. We're still at the 50%, the constant encroachment of this 4 hour fair value gap. So it's still respecting. So now my draw on liquidity would still be lower, targeting this swing low. It looks like it wants to do that. Yes, it does. And let's see how the candles are closing below this low. We take this low and we displace a little bit below it. So still down close candle could be on the move. But if we take a low and we have this 4 hour fair value gap, your draw on liquidity short term could be an external range liquidity move to internal range liquidity move. And the next candle indicates that. So I would look for the next candle to trade it to this fair value gap. This one doesn't. And the next one does. And what you want to see, you want to see price trade to this 4 hour fair value gap. And the body should respect the 50% of this fair value gap to still have this bearish bias. If it doesn't respect the constant encroachment, you can expect higher prices and trade it to this high. So let's see what price does. Still respecting it. And after that, around the open here, you see this body close above the 50%. So now the draw on liquidity is going to be to this swing high. And it does. So we now switch from bearish order flow to bullish order flow. And we have these fair value gaps. We are in a bullish order flow. So on the lower time frames, I'm looking for longs. Next candle goes. And we take out this high a little bit. But we fail to displace above it. And that indicates to me that we fill this high. We sweep it. But we're not going to trade yet until this 4 hour fair value gap. And that has to do with the displacement. We trade above it and then come back into the range. And I see price trades into this 4 hour fair value gap. So this would indicate a retracement or a reversal. So there you can, for example, look at your OTE, swing high, swing low, and you can target as draw on liquidity the OT area together with this order block, with the fair value gap here. So the buys from here is lower prices until we see otherwise. And we trade back into the high one more time. We create equal highs here, but we fail to displace above it. So these equal highs and this fair value gap will be saved for probably later. Then we go lower, trade to this fair value gap, and it looks like it wants to respect this fair value gap. So let's see what the next candle gives us. And the next candle gives us the confirmation that we're not going to respect this fair value gap and probably going lower to this fair value gap in the OT area. And we do that at the new day opening. So now let's look at the discount ratio we have. The fair value gaps, we go from external range liquidity to internal range liquidity. We are in discount of the range. We have this fair value gap and we have this fair value gap, and let's see how they are holding. So based on how this candle prints, this fair value gap is probably not going to hold. So my drawn liquidity will be to the next fair value gap. And it trades into it, and you see, we trade into it, we trade lower, but we fail to displace below this fair value gap. So this fair value gap, this would indicate that it's going to hold. So then my next drawn liquidity will be higher, taking out this high. And it does. And this down close candle can now become an order block. Why? A down close candle that takes out liquidity, trades to a discount array, is a high probability order block. So this should support price to go higher. And my next drawn liquidity will be these equal highs that we left behind. So from this point, my drawn liquidity will be higher, and price, the candle should support this order block. As you can see, price trades to the order block, and the body closes above that order block, and we go into this fair value gap. Now at the fair value gap, the consequent encroachment, do we respect that? Yes, we do. For now, so let's see how the next candle prints. A next candle also respects it. So now my drawn liquidity will be for the next 4-hour candle to reach back into this fair value gap. This 4-hour candle doesn't. This one does. We are still respecting the 4-hour fair value gap. So with that in mind, with this move, I would say we're not done with the upside. So our drawn liquidity will be these equal highs. And we have one more touch into around the 50% of the fair value gap. And then we go higher. So next drawn liquidity, this is 6 a.m. So the next 10 a.m. around the open, that candle probably goes to take out the high. And it does. And we close above the high. So higher price are still at the cards. So now what you have is this swing high is drawn liquidity. And we have this 4-hour fair value gap and order block as your defense, your premium arrays. So let's see what the next candle does. This is an inside candle. So inside this inside candle, we have this 4-hour fair value gap to trade higher from. So that will be my point of interest trading this session. And we take out this high, so probably higher prices are still on the cards. We're going into the new day. And this London candle is very aggressive downwards. So that could indicate drawn liquidity could be here or could be here. In this case, if we are between 2 points of interest, this discount array and this high, I will be 50-50 and I won't be trading. I don't have a clear drawn liquidity. I want to see more. And here I see touching fair value gap and then displacing above it. So then on lower time frame, my drawn liquidity will be higher, taking out this high. And the interesting part here is we take out this high, but follow the displacement. We fail to close above this high. So then the next drawn liquidity is probably going to be this swing low. And it does. At this game, you can play all day. So follow the displacement on the higher time frame. And from that point, you can go to the lower time frame on an intraday basis to frame your lower time frame entries around that. So now you might wonder, like, okay, this is nice on 4-hour. You can find your trades based on just following the displacement and using your internal race liquidity pools and your external race liquidity pools. But how can I find my intraday trades around this? And to take an example, here you see the 4-hour context of this current 5-minute chart. So we are currently in this 4-hour fair value gap. We are looking at respecting the 4-hour candle, and then drawn liquidity will be the next high right here. And that's this dotted line right here. So how can you now frame a trend throughout this? We are inside a kill zone around the open. And this looks like the sell tilted curve of a market maker buy model. For drawn liquidity, it's going to be here. So what you want to see around a higher time frame array, in this case a 4-hour fair value gap, do you see displacement upwards with energy? And are the discount arrays still holding? So right here, we see displays it up, leaving a fair value gap on the 5 minutes, and the bodies are looking like they're respecting it. We also created a order block, like those candles, and it looks like on the current price action that the bodies are respecting that. We trade it in again, and now you see the bodies are still respecting the 5 minute fair value gap and also the order block. The bodies tell the story, the wicks do the damage. So now you see displays upwards. We're leaving a fair value gap, and you want to see this counter raise holding if you are now at the buy side of the curve. We're still with the 4 hour context. Let's see what price does right now. It comes back into this fair value gap and even touched the order block again. And then it trades higher towards the drawn liquidity. So in this 5 minute market maker buy model, you see the discounted rates are holding. This discounted rate didn't hold, and that can happen. But this last line of defense, this 5 minute fair value gap, the bodies are still respecting the cost for encroachment of it, and also the mean threshold of this order block is still respected. Then we're trading higher, leaving a fair value gap right here, leaving a fair value gap right here, order block, fair value gap, and all the discount arrays are holding. So in the buy program, all your discount arrays are holding, and look at how all the 5 minute fair value gaps are respected until we are inside this drawn liquidity. So now the question, how can you take a trade around this? You could have taken the trade around the open, supporting this 5 minute fair value gap with your stop below this low and your target the drawn liquidity for 1, 2, 3. You could also have targeted this 5 minute fair value gap for 1, 2, 1, 6 or the order block for 1, 2, 2, 7. It doesn't matter as long as your stop was below this low and you know that the bodies are going to respect this 5 minute fair value gap. Important note here, guys, this piece of price action is very clean, but it isn't worth anything without this 4 hour context behind it. So the mantra I have in the top right corner, if you're not trading from a higher time frame array, you are gambling. That's true, and you should always use this. So if you take a trade and it's not based on a higher time frame context, a 4 hour context, or maybe a daily, weekly, monthly context, you are gambling, so please don't do that. Thank you for watching this video. If you like this kind of videos, please like and subscribe, share it with all your trading friends, and I will see you in the next one.